a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Basil Chapman, Tiger Technicians Hour, the Friday edition. 2 fabulous hours with Steve Rhodes. Congratulations, Steve, and the great explanation and the great trade that you had on that EXM, and nice explanation, of course, with your Master Trader series coming up in the 3 different cities. That alone should be incentive for anyone listening who's serious about technical analysis to consider your course, and that it should be a really fine educational experience. So let's go straight to the market. Oh, Friday. Nico Dahan, Your Health, coming straight up after me, 12 o'clock. And then Dave White, the fabulous Dave White, our technical guru and editor of 2 great newsletters, comes in at 3 o'clock. And 4 o'clock till 6 o'clock, you've got Steve Rhodes. I'm not sure who's in for the second hour. And so a full day here at TFNN. Let's go straight to the market and look at the numbers. And as I'm on the way to the market, looking at the debt, I have to tell you, it's very, very sad news. One of our debtors, one of our core debtors, a person who actually adds a tremendous amount with the information that he gives in the evening after working 10, 12 hours. I don't know what he does, but he comes in and he does it. Act 2 is his name, and evidently he lost his father. His father was ill and was starting to do okay. Lost his father, and our deepest thoughts go out to you and the family. Very, very sad moment. Now, when we're looking at this market, what is really fascinating is when you look historically back, and historically back, it depends on your time frame. Historically back, if you're looking at say a 3-minute or a 5-minute chart, could be like 2 weeks ago, but it's the history. It is what has happened before, what is repeating, what characteristics are the same as at other periods. Well, if you look at the Dow, let me go to this, which I show my subscribers every day. In my Dow chart, there was a breakout. It was a perfect, what I call a Chapman wave cup and ladle formation. Instead of stopping like you do with a cup and handle, I hate those, because they almost like inverted head and shoulders patterns. By the time you actually recognize it and it breaks out, it's almost time for it to come back into the body again. So I hate it in the sense that it's really a late looking technical indicator because it fails so often. And when it does work, it doesn't give you, my experiences, it doesn't give you all that much unless you read it in a certain way and you're prepared for that next pullback. Now, this is different. The cup and ladle says not only do you take out 13,055, the high of the 29th of February in the Dow, you spliced right through it. I'm raising, you can tell I'm raising my hand, whoosh, and it went straight to, that was a 12,953 was the low. It went right to 30,180 and closed almost at the high. Now look at this. We don't know where we'll close today. Options expiration. We've already had, in my Chapman, I'm going to talk about that in a moment. Let's do one thing at a time. In this particular breakout, what you've got are 7 white candles. In this particular instance, because I want my subscribers to be able to print this out, I've got it instead of my usual black background, which is pretty expensive to print out, I've got the white background. And it's a very important chart that I like them to study because there are no technical tools like a MACD or a stochastic. There is a red line, a 9-period exponential moving average, and then trend lines. And if you remember, about 3 weeks ago I was saying, be careful. There is no guarantee that the book that says a rising wedge formation can break down and go all the way to the bottom of the start wedge. It happens so rarely. I don't know why they even mention it. They should mention it as a subsidiary of what often happens, is that you get a pullback, and instead of going straight down, because of the rising wedge, the amount of buying that's been going on, there is residual buying, and that residual buying holds the price and makes a kind of a cup formation. And it's within that cup formation, the right side of the ellipse, that you want to be watching really closely what happens. Why? Because if, this is Technical Friday, so I like to get a little more technical than on the other days. If you make a right shoulder failure, in my CD introducing the Chapman wave, that's a specific kind of pattern, a right shoulder failure, fails below the previous major high. That would make that pattern that I call the lowercase h, the dreaded H. But if it continues rising, the moment it gets almost at, on, or above the previous high bar, in this case the bar of the 29th of 13,055 in the Dow, that's when, Tom often talks about swings, and he talks about where it releases the information. That's exactly where it releases the information. And that information is that if it stops dead, you could be making the double top, which is a deadly one. It's a drop bucket pattern, because you could come back. If you pull back more than 50%, you're bound to retest the low, which would be 12,734. If you close under it, you could even have a one-to-one extension to the downside. But if you splice, go right through it, slice through it, and just tear apart that resistance, that's very positive. Hey, wait a minute. That's not good enough. I want to show you something else. In this particular chart, which I showed subscribers, they've never seen it before because I'd never drawn it before. There's an up channel, a beautiful up channel. Uh-oh. There's a little faulty. Oh, you watch this squeezy. Oh, this is so fascinating. I'm doing nothing. For those of you in TigerTV, this I don't know what it is. It's a problem on this particular chart. You see how it's narrowing? I don't know why. It does it on every tick, I think. It's a problem that I had years ago, and it was resolved and came back, and it happens just on a few charts. I hate when that happens because you have to do a lot of work to resolve it. Now, look at this. This up channel shows you the red line is support. Whoops, I'm going to try to keep it up. You have to keep scrolling. And the dashed line is the inside track buy mode. The inside track buy zone. And then that mid-channel line, oh, it's going to drive me nuts. I can't do this. This mid-channel line is what you want to see because it's the magnet line, and you want to be trading above it like a 9 EMA. The pink one is the 9 EMA. And then what you do is you go up towards the inside track sell zone. But I didn't want to talk about that. I want to talk about the candles. You see these candles over here? I wonder if I can resolve this. The candles, all those beautiful white candles, the start of a big buy mode. You see those white candles? That was in December. You see in October, the same thing. So this is very important. And what I would do is I would say that right at this particular point, what I'd be looking at is a chance that we have got an extension up in the Fibonacci to about the 12,377 level in this move. That'll be the next goal. Now I can get rid of that. So the candles match very similarly, and I'm expecting that we don't close at the high today. I'm suspecting that this is the the 8th day. You're hardly likely to get an 8th day of a white candle. You can, but that would be amazing, but very bullish. I suspect we either make a doji and a pullback towards the end of the day, so that would go in line with a possible doji. And then Monday we come in weak. Or we have a rally, but it fails. And Monday is just a kind of a poor day, a reassessment day. That's kind of how I'm looking at it, but I'm very positive. Real near term, I can see many stocks need to have a pullback, and I think they will. So now let's go through the numbers. I just wanted to go through that because it's so important. I also want to look at the RTH, that's the retail index. The politicians keep talking about this recession. I must tell you, it was a recession if you had anything to do with the housing market, which of course impacted hugely the banking sector, the mortgage sector, and of course all the other different related areas. But it was so quick that we started from the March low to see other sectors improve dramatically. So now this is what I wanted to say. In the, move this over, in the Dow, we've made a new recovery high today. Right, and that's very important. We've gone from 12,734 so far to today's high. That might even be the high for the day at this particular point, 12,284. That 13,284. So that is just a fabulous move. That's 600 points. Am I right? Yeah. Yeah. So now what you can expect is some kind of a pullback. Doesn't have to be deep, but it's a pullback. Maybe it's time. Maybe it's price. I don't know. At this point, the 120-minute chart is saying to me, okay, the levels to watch are 13,206, 13,167, and major support at the 9-period moving average of the Dow at 13,102. Now let's go to the S&P. Remember, this is technical Friday of the Chapman wave, so we can go into it a little bit in greater details. S&P is acting a little bit better here. It's gone from 1340, the low of the 6th of March, to the high today of 1405. So that's 60 points. That's plus 5, so 65 points. Hey, great rally. Now, what's important, I didn't talk about that in the weekly chart, but the weekly chart of the Dow, but the weekly chart of the S&P, 1370 was the high last May, 1074 was the low back in October of this year. In the time price match, last week was the final week for the time price match, but we snuck above it 1 week earlier. That was a big positive, and that was at 1378.04 last week. And we had 2 weeks ago. Last week was an inside. It was a lower high, so that may peak B, and it hit the 9-period moving average exactly, and then it rallied, and now it's in leg C. The Dow in the weekly chart is in leg C as well, and it too has a rising wedge formation, but it's breaking out. Now, breaking out from a wedge formation is usually very positive. That is without any significant pullback within going through the apex, and then you break out to the upside. And the monthly chart so far is very good. So that tells me that the S&P has near-term support at about 13. Whoops, the 120-minute chart. 13. Oh, can't be 13 because it's the S&P. SPX.X. Near-term support at 1397 and then 1393, and I would not be surprised if there is a sudden sharp pullback. One of my indicator stocks is telling me be a little bit careful here because all the 120-minute charts that I've been looking at are either in leg D, E, or F. So that's just be somewhat careful. So there could be a sudden pullback, and everyone says, "Okay, this is it, cycle dates and all sorts of things." But in fact, what happens is it should hold firm, and I suspect that the 1389 area, somewhere around there on the short term, that kind of area is where I'd be looking at the S&P as support. 1, 2, 3. We've got the Qs. The QQQ Trust Series is at 66.57, making a peak B from the doji of yesterday, down 12 cents, making a peak E in the 120-minute chart. Strong leg D. We'll be back. Basil Chapman, 877-927-6648. Just a little bit more to go. Had a question from one of my subscribers about the euro, US dollar, and crude oil. I'll be back straight after these messages.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour. In fact, I've just decided. I've been working. I don't know how many hours a day this week, studying the charts. We've had a very nice week in the opening call from our subscribers. We took profits today. I was hoping not to have to take profits today, but we took profits today on a stock we only bought yesterday. It was it was a key stock that we wanted, but I just had the feeling it could be weak into Monday, and we'd have another opportunity to get it. So what I'm going to do is I'm going to just quickly wrap this up, and then let's have a lightning round. We'll have tons of callers, and people in the den. You can fire away. Give me a moment here. I just want to finish this because it's quite important. I'm looking at where did I leave off? Oh, at the Qs. Now let's just do this. Apple. Yeah, they could try to close Apple today with options expirations give it a pin it at about 590. But my suspicion is they might go for the 585 level. We'll see. It's already had. You remember Apple yesterday went to 600.01. What a pity it wasn't a round number. I'd be able to say, round number. All I can say is that if Apple goes to 600.02. If you're short, be careful. They can push it another 10 or 15 points very quickly. But I think Apple, in fact, is very tired. The candle that I'm looking at says, yeah, it might go a little higher, but now it's starting that rectangle consolidation at best. At worst, it could quickly slide to the 565 level where the 9-period moving average is, and I'll tell you when. If it breaks 572.9, it's going to get fancy. If it closes under 573 for 2 out of 3 120-minute bars. There's a real good chance it goes to the high of 568.18 of the 13th. That's where the gap was, and that means that the 9-period moving average of 565, that whole area between 569 to 564, that should be a containment area, and more buyers who want to come in to try to buy it again, and that could be their big mistake, at least in the shorter term. So I just wanted to do that. Now, the other thing is, most importantly, the TLT. The TLT is right at a point now where it could very easily have a bit of a bounce. But I'm saying bounce, and let me explain why. I discussed this particular pattern for quite a while. And what it is in the weekly chart of the iShares of the Lehman 20-year Treasury Bond Fund, when you look at the peak E top that it made in the Chapman wave. Now, let's just do this real slowly. From the low bar of the week of the 1st of July at 93.14, it very clearly made a peak A at on the 15th, week of the 15th of July at 97.90, then at 112.14 on the week of the 19th of August, then a peak C at 114.93 September of last year, and then 2 weeks later it made a peak D at 123.87, pulled back for one bar, and then squeaked to a peak E at 125.03, and then pull back very sharply. And I said, I know this pattern. I've seen it many times before. My suspicion is you're going to have a rally that should take you, it could take you on a shorter term basis, and that could probably be the daily chart, to something like a peak D. If it fails under, at, or just above the 125.03 and then has a sharp pullback, be aware that it could pull all the way back, break under the 9-period moving average, and potentially go right back to the low bar of 109.82. This morning, the low was 110.20, 42 cents away. And the MACD is still very negative, and the stochastic's very negative. The monthly chart is still doing okay. But okay is not good enough on the short term. But if you look at the daily chart, it has made a series of lower highs and lower lows that makes a down channel. And I spoke about the down channel. I spoke about 112.20. I don't know if it was a little higher, but 112.20 to 30 area as the 200-period exponential moving average target. Well, it's gone under it. It's closed under it twice. I don't know where it'll close today, but so far it's underneath that at 110.97, down 24 cents. I suspect, based on my 120-minute chart, that it is very close to a pop-up. And I have to, at this point, call it a pop-up because, why? I believe very strongly, regardless of this Japanization of our bond yields, that can be set aside. Why? Because there really is some kind of a recovery in the price of the stock shares of the home builders. So that's different to Japan. That's very different to Japan. So I'm going to be watching this closely. So now we've got that done. I'll talk about one or two other things. Give me a list of stocks you want to look at, and we'll do we got callers online, and then we'll do a race through and see how quickly we can get through as many as we can. In a lightning round. I'll be back.
Hi folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2 week free test drive right here, right now.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil, Chapman, Tiger Technicians Hour. Oh, that's what I was going to talk about. I have this technique that I've developed for what I call the Chapman wave trin gauge. Now, Richard Armistice developed this incredible, he had the foresight to develop this particular technique. I use it in a completely different way. I've developed a methodology that says that if it goes to certain highs, you can expect something. If it goes to certain lows, you can expect something else. And on that basis, we were expecting a pullback 2 days ago. That's what we got. And yesterday, because of it, I said that today, regardless of how strong it looks, this morning you will see a pullback to minus in the Dow. We've got that. This indicator has, I don't know if I want to go through. I've written it down somewhere. I should have put it into software. I haven't. But it's got like on the absolute strictest way, even if I exclude the days that the Dow was up 300 points and then dropped 250, but still didn't go minus, I didn't include those. So on that basis, it would have been about 92, 93% accuracy over the past 2.5, 3 years. If I include those days, it's up in the 96%. So it said again, and it worked. And that says to me, as long as certain indicators are working, you've got to keep using them. So right now, we are down a little bit in the Dow, and the S&Ps are just up 93 cents. And we're going to go to our first caller. We've got Bruce in Lakeland. Hi, Bruce. How are you?
Hey, I'm doing fine, Basil.
Good.
I'm enjoying your morning call here.
Thank you for my opening call. Yeah, Tom always, for 8 years, he's called it the morning call, and I really don't want to correct him, but it's called the opening call, and I know that anybody who goes there will know that the morning call is really the opening call. Yeah. Thank you. So you'd like to look at?
Well, yesterday you made a statement in your call that said that if the Dow was up by 60 by 1 p.m., that you could look for, you needed that for a positive close.
Right.
And how do you do that?
Because
that's exactly what happened. I think it was around.
It was exactly right. In fact, it wasn't like that at 12, then it just started creeping up. It was like 58 points or 60 right there. People ask me, when I do the Master Trader series, and as I'm sitting there, I say, okay, now at 10:22, you got to watch. And then right at 10:22, it happens. People say, how, where, how, what? And I have to tell you, there's something that goes on in the back of my head that just throws it forward, and then I regurgitate what comes flashing through my mind. There is a methodology, but I have to tell you that, because sometimes it isn't consistent. It's one of the few times I said, like at 1 o'clock. Usually I'd say 10:15 or 11:20. And out of the blue, that's the time I don't know. There's a whole thing that goes on in my mind that says that's the number and that's the time. Let me explain two things. One is there are certain times that I absolutely know that there can be a change of trend. 9:55 Eastern Time to 10:03, when an economic number is about to come out and then comes out, you could see at least a minor change of direction. Then at about 10:22 to 10:35, that direction either gets confirmation or, like today, you go wiggly woggly and nobody's really sure what's going on. So that's another important time. Then I know that one day in the week, not every week, but most weeks, I've scheduled to go play tennis with a good friend of mine over at Boston College. So I know that I watch, even while I'm playing, I have my ticker. I can see exactly what the Dow is doing. I stop in between every couple of games and I check it out. And I know that there's a period from doing that between, say, noon to 1:30, better not go to 1:45, but noon to 1:30, there's a good chance the market can just stay in a trading range, especially if it's up strongly when I leave. It won't go that far. It won't go that down. It'll just stay. The moment I get back, bam, it's into a whole new thing. So I just have stored this up, and, I've watched the market every single minute for the last 30 or more years. I've either notated the 1 minute chart, or if I'm in the office, or if I'm even shopping or doing something, I will take my ticker out, and in my mind, I'll say, okay, the Dow should be up 32 points right now, and if I check, and if it is, I say, great. And so I'm just doing it. So I can't actually give you an answer other than to say there are specific times of the day where things can happen that I'm sure a lot of people know about, but I've kind of stored them up, and I put it together with the VIX, with the TRIN, with other things. So I wish I could give you a real simple answer other than to say, yesterday I wanted to push it because of options expiration today. I wanted to push it a little later on, and if it did that, then there was a good chance that the trend would continue. That's a long answer, and I haven't even given you the real answer, but I've sat there in the Master Trader series, and I've tried to fathom it out, and I've just said, I'll tell you why, and at that particular moment, I try to, this is the whole thing about when I wrote my CD. There was things that I did and things that I saw that I just did automatically. But when you write it down, you have to be so specific. And in my Chapman waveform, to be able to put it on software, I've been writing down specificity that I've never had to do before. And then you just store it up. I'm sure you, in whatever field you've trained in, you have the same sort of parameters and the same sort of cognizant images and impressions that go on in your mind, that if I said to you, how did you know that? You say, gee, I don't know. I just know it because it always does that. You know what I'm saying?
Yes, I do understand what you're saying. It's almost like an intuitive sense, and
it's intuitive, but
you can't really put it in words.
It's intuitive, but I did not pop out the womb saying at 1 at 1 o'clock, the Dow, you know what I'm saying? So it's a developed intuitiveness. It's like a musical instrument. You don't want to say, oh, wait a minute, a G sharp. Oh, I got to turn the page to G sharp. Oh, I got to press my little pinky finger down. 1 and 2 and 3 are down. Thumb is on the register key. You know what I'm saying? It's intuitive, only because you've practiced it so much. And that's what I actually do. I practice on all sorts of charts during the day when I'm not actually, even if in the middle of trading, I'll jump to some other charts to practice the technique that I have, just to keep it honed. Hope that answers your question.
That's very good. Now, do you have other callers, or do you want some more questions?
You know, I've got a bunch of callers, and I promised a lightning round. But you know what? Are you able to call Monday?
You know, I'll wait. I'll check even later today and see how your calls are going, or I'll call you on another day. I had some other things I wanted to ask you, but they're not real important for today.
Well, they are important. They're important to me, but I'd like time to answer them, and I better get on with the callers. They're all waiting very patiently. So if you don't mind, Bruce, call Monday or Wednesday, and we'll take some time, because your questions are questions that I would like to know. I'd like to be able to verbalize, and I'm sure other people would like to know as well. So thank you so much for calling.
All right, sir.
Thank you. Let's go to Robert in Chicago. We've gone from Lakeland. We're going off to Chicago. Hi, Robert. How are you?
Thank you, Basil, for taking my call.
It's my pleasure.
Hey, Basil, I'm long ticker MAKO since January. Would like to stay long, but I don't know where to put my stop. Can you help me?
Okay, so Maker Surgical, this is equipments and supplies. Now, folks, for those of you who are looking at Tiger TV, suddenly a chart pops up and it's all notated beautifully. That didn't happen by accident. There's no software that I can press, not yet, that I can press and you've suddenly got all these letters. I have to do every one, and the fact is I try to get to as many in my lifetime as I can, and I've lost a lot for other reasons. I don't think it's TradeStation's fault, but my computer, I don't know what it is. So they're there somewhere, but they're not showing up, so I have to renotate hundreds, thousands actually, that I've done before. It takes a lot of time, but I like to have them ready because people, you know, it's important that when a Robert calls or someone calls and has a particular stock, I'd like to have it notated. So this is very important. Mako, M-A-K-O, is at 38.20. It's up 9 cents. It started a new buy mode at 24.40 on the 9th of December last year, and it went to peak A, B, C, D, and then an E on the 26th of January. Then it pulled back and held this little green line that I make it dark because I don't need it until I need it. Right now it's important. So that's the 200 period simple moving average. It went right to that and started a new buy mode, and it went peak A, peak B. Now, I'm going to be writing this down. In fact, I'm taking time right now because the other day I said I'd do it, and then I forgot because I didn't write it down. There's a technique that I developed over the years. All of this is based on the Chapman wave, and what happens is sometimes instead of just going that one extra penny, it went to 40.18 on the 28th of February. It needed 40.19 for a peak D. When it went to 40 round number high on the 5th, I call that a C1, C2. In other words, it went to a peak C, and then I make the C2 a little bit lower to show that it actually failed, but the stochastic was failing, the MACD turned down, there was even volume to the downside. Everything about it said, hey, this is not good. It is starting to fail, so this could be like a peak D, but a phantom peak D, so I call it C2. Now, what happens in this particular pattern, so many times, you get a pullback, but then you actually do get that leg D. Now, you want to know about a stock. What price did you get in at about maybe 31 or 30?
25.50.
Oh, if you're in at 25.50, let me do this. One part of your position, just one, it doesn't even have to be a big part, but one part of your position needs to use the weekly 9-period exponential moving average of 36.30, not as a stop, just as a yellow light that goes on, and I'll explain what I mean. Because if it takes out last week's low of 35.84, then there's a chance that it could start to stall and take a little bit longer before it tries to make that peak D, and it will have made that pattern I call the dreaded H in the daily chart. But here's the other thing. Not until that happens should you do anything. If perchance by Tuesday or even Wednesday it's able to close above 39.21, make that one part that we were just talking about, make that a trailing stop. And I'm going to explain why. If it's able to make leg D up above 40.18 in the next 2 weeks without touching that 9-period moving average in the weekly chart, that's really bullish. And all you've done is you've got yourself the security of a trading stop that's going to move. And I would say if it breaks above 39.21, make that trading stop a point.
Okay.
A point. In other words, let it move point for point. And if it goes up 10 cents, you raise your stop 10 cents. And it's only, it's just on one part, but congratulations. I think you've got a stock that has the potential, if the MACD at 90% can hold, to go to the wick of the October of last year, and 43 was the round number high. So I think you've got yourself a good stock. It needs to work for you in the next 3-4 sessions by pushing that a little bit higher. Hey, nice entry. Congratulations, Robert.
Thank you, Basil.
Thank you for calling. Let's go to Bob in Seattle. Hi, Bob. How are you?
Just fine. Thank you for taking my call.
Oh, it's always a pleasure.
Yeah, I'd like to know about Microsoft. I got in about $26, and as a trend trade or a swing trade. So, do you think it could go to its high of 34 or?
Okay, first of all, congratulations.
Thank you.
You've got a really nice stock, a good choice, and of course, there's no bias just because you're from Seattle with Microsoft, right?
Right.
Right. So this is what I'm looking at. It's trading at. Wait, what price did you enter at?
About $26, $25.81.
Yeah, but I tell you that 26 because you've got, and you're talking about a swing trade. I don't want to ask you any personal questions, but I'm going to think about this. If you have enough to do exactly what Robert is going to do, make one part of it as a swing trade, and it's really talking about swing trade. Where are you going to swing to? You have to use either extensions. There's nothing, you know what I'm saying? There's no left side that's close by. Microsoft right now is at 32.83, and 32.83 is above the high of 31.58 of April of last year. So the level I'd be watching was a peak C minus. I remember this so well. It doesn't happen very often in the Chapman way that we get a peak C minus at the top, but we got it, and there's no other way I could count it. It's a peak C minus failure. Let me I've got the page right here. Did I put that down? Yep, peak C minus, Microsoft. Thank you. I've got quite a few of these here. That's the monthly chart. Very seldom in a monthly chart you get a peak C minus. Now what's important, 11:30. So that's November 07. Oh, this book's going to be fantastic. So what we're looking at now is that is the high. 37.50 is the target high that I would have for Microsoft looking out. Now I'm going to make a suggestion. I would not talk about a swing high, even though there could be a pullback based on the 120-minute chart over the next, let's see, peak A, B, C, D, E. Yeah, I can see a bit of a pullback, and I can even see the pullback coming back to about 32.17 to 31. Yeah, I could even go back to that candle, 31.82. So on a very shorter, on a shorter look at this, I would say that if it broke 32.15, I would take a little bit of money off of like a 1/3 position. I would keep it because this is leg C up in the weekly chart, and I know you said that it's a swing trade, but I have to tell you, it's one of the good-looking stocks. So, Barbara, I'm going to do a little bit more work over the weekend. On Monday, if you want to call, I'll give you a little bit in-depth. Right now, I would not do anything. I'd have a trading stop of about 1.5 points.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. So, 2 things that we need to look at, and that is very important. And we've got a bunch of callers, and I'm going to go through this quickly in the remaining time. The triple yield chart made a quick leg D up. This is what I show subscribers about every week, and this is my weekly chart. This is very unusual to go this quickly, but it also says there could be kind of a rectangle pattern forming, so that's going to be important. Let me get rid of this. Now, had a couple of questions about, first of all, in the den, we've got Art wanted AMRN. AMRN is Amarin something, I know. Is that Amarin? Yeah, Amarin Core PLC, I can't remember what they do, but this is very interesting. In the weekly chart, it's in leg A, B, C. Very strong, actually has good volume. This is where I like to see volume, and that says to me that going to the daily chart, if you are long, then the most important thing about this is that it's broken out all above all the other previous highs, and it's at $10.39. It's up $1.48. If you've just gotten into this is leg A. And that's very important. Just don't have time to do any Chapman wave. Let me do it quickly. A, B, C, D, made a peak E, made a peak F top on the 16th and has pulled back. Now what's really important is that as support, the 8.887, so 8.87 level is the 200-period support that was resistance, and now it's going to be support. So I would look at this. Let me quickly grab the 120-minute chart. I would say if you are looking at it and it just suddenly popped up and you aren't in it, now you have to be much more careful. But if you want to get in, I would say somewhere around, if there can be a pullback in the next 2 days or so, it's got to be quick. I want a quick pullback and then a real quick reverse back up to the 1039 level. But if you can buy it somewhere around between 9, it's a big pullback, somewhere between 967 and 935, a small position, and that position must have a stop underneath 8.46. If it starts to go back to the highs, you can even add another small position. Keep them small. So that was that. Let's go to the next one. That is, we've got SAT in the Den 1 to GTI. How are we doing for time? Yep, we've got time. Now, it gapped down. I'm going to be talking about gaps. I might even spend next Friday or something like that on gaps. It's really, we've got so many gaps, and they will be filled at some point, the last ones. So this is trading at, it is Graph Tech International, made a peak E high in the monthly back in 2011, up in the 24 area. It's come all the way down. I don't think I like this at all. I'm looking at it very closely. It made a peak D with an instant restart in the daily. I don't see anything here. Yeah, it could pop up. I don't like it. It hasn't been able to respond at all. I wouldn't be touching it, and certainly I wouldn't be shorting it either. It's not on my list at all. It has pop-up potential, and all I can say to you is if it breaks above 12.19, you want a speculative thing for a day or two, you can grab a little bit at 12.20, but you better have a 20-cent stop and then run it and see if it can hit the 12.49 level of the 14-period moving average. Then another one is Zip wanted. I don't know if Zip said Met Basil or MET, so I'm going to go to MET. I hope I met you, Zip. I just don't remember. So Met is MetLife. And I always think they're insurance, but they're not. Yep, they're insurance. MetLife, of course, they do the great commercial. Made a peak D top in the monthly. The monthly is improving a lot. Weekly is walking the 9-period moving average. If you're in it, make your stop on some position under the 37 round number low. But it's walking the 9-period moving average. The MACD is good. Stochastic is good. And the daily says we've got to be a little careful because if it pulls back here, then that was not 37, it was 37. So 37 is the round number low. I like it. I think it's doing well. If it can break above 39.55, that's great. So folks, love the action. I'm expecting some kind of choppiness over between this afternoon going into Monday morning, a pullback. Monday afternoon to Tuesday afternoon, we should try to get back to the highs or make new highs. I love the market action. Thanks for being here, and I'll see you on Monday.